So I think a lot of people don't play the game because they don't know where the market is going. They're afraid that if they get in now, things will drop, or is it the top? Is it the bottom? How do we play this thing? How do we hedge? Can we hedge? Risk reward. I really wanted to have a chat. And David, thanks for joining me here today with David. I mean, we've got clients in Fast Track with, $50,000 portfolios, $1 million portfolios. I think one of the bigger players has 15, 16, $17 million portfolios. And these guys don't F around. Like there's a cost, there's a price to being wrong. And like when you have $12 million, you've done something right in preserving your wealth and growing it, that you're not an idiot. And so there's high net worth individuals playing this game. And I thought we'd have a little conversation on like what do you see in the markets? How do you think about risk reward? And maybe we can even touch on a little bit of hedging and how you guys think through that of what if you're wrong? How do you hedge against that? So yeah, let's have a little chat. I know there's a little driver for you're kind of looking over the next few days of what's going to happen with a few things. So walk us through it. What are you guys looking at in Fast Track?
Yeah, so the number one thing that I think about, Lucas, is not so much about, well, how much can I make? It's about what's the risk. I always want to protect the downside. The single most important thing for me and for clients in Fast Track is making sure that we don't lose. Over and above making money, we can't lose the capital that we invest in the first place. So a strategy that we've developed in Fast Track that's been working exceptionally well is hedging our LP positions or deploying 100% borrowed capital such that we are hedged to the downside. And Lucas, this has been working exceptionally well. And I just want to walk you through real quick what a hedge looks like when we're providing concentrated liquidity on Uniswap, on Aerodrome, on PancakeSwap. You could do this on Solana. You could do this same strategy on Sui. You could execute this strategy on Ton.
Mm-hmm.
This is not unique to EVM chains. You can do this anywhere. You can lend and borrow. So let me walk you through this real quick. What I'm showing here, these green horizontal lines, these represent my ranges for a couple of positions that I'm going to show you in a moment. And this white line represents the cost basis of my borrow. So what I've done, if I move on over here to Aave, is I have supplied stables and I have borrowed ETH against it. And what I did with my borrowed ETH is extremely important. So I took this 5.85 ETH and I deployed it into two LP positions. Over here, I've got one position on through VFAT. This is wrapped ETH USDC. And my other position is over here on Uniswap on Arbitrum, wrapped ETH DAI. I'm also earning some nice Merkle incentives as a result of being in this LP position. But the interesting thing here is that because I deployed 100% borrowed capital into those two LP positions, I've isolated my fees from the directional risk, especially to the downside. So it no longer matters to me if ETH declines. ETH could go to zero tomorrow, and my wallet balance would not be impacted negatively because I deployed only borrowed capital into these LP positions. So what I've essentially done and what I've been watching happen in my wallet is my wallet balance is slowly ticking higher because I'm just earning yield. I'm not being impacted by ETH's directional movement. So the cost basis of my borrow becomes extremely important. And let me walk you through how I'm thinking about this. So I initiated this position when ETH was right around $2,700.
Mm-hmm.
And since then, ETH has declined from 2,700, the current spot price around 2,400. ETH is down 11%. My wallet balance is up.
Mm-hmm.
And all I've got to do is make sure that if ETH moves up towards the cost basis of my borrow, that I either close the hedge or repay some of that borrowed ETH, or I could flip the cards around entirely. I could close out the hedge entirely and lend ETH, borrow stables against it,
long.
and lever my LP positions. Now, here's the challenge. We have some event risk in a couple of days here. That FOMC meeting on the 18th, where everyone expects Jerome Powell to cut rates in the United States by 25 basis points. that is the event risk. And, I read these bulge bracket and hedge fund reports. And what a lot of analysts are speculating on is what is the direction of equities markets after that first cut. So this, Lucas, is a chart of the S&P 500, the 500 largest companies in the United States, the stocks of the 500 largest companies. Take a look at this recovery here, this move here, but we're coming up to resistance. Today's Friday. The market's going to close in, it's 10:15 a.m. Pacific. So markets close at 1 p.m. Pacific. And, if the S&P breaks above resistance here, that would be pretty bullish. But remember, we've got that FOMC meeting. And what I've been reading about is analysts speculating that in the days following that first cut, we may see a sell-off. So remember, because crypto is so positively correlated with equities, if we see a sell-off in equities, that will probably reverberate through the entire crypto space. And we might see a little bit of a move to the downside in BTC, Sol, ETH, and the rest of the assets in the crypto space. So that is what is first and foremost in my mind. And I want to make sure.
And
exactly.
you've been, you're always talking about it recently.
Yeah, that's exactly right. I just, the month of September is seasonally a little red, not just for crypto, but also for equities. And so I'm thinking to myself, well, if September is going to be red, I want to be hedged. And then October, November, December tend to be much greener months. So I'm going to keep my hedge on for now. And if we see a little bit of a sell-off post that FOMC meeting, I'm going to use that sell-off to increase the size of my positions. So that's what I'm looking to do.
Let's go. I love I hope anyone watching this, like maybe you're, you've got 50K plus capital, 25K plus capital, and you want to have these kind of conversations consistently. You may be interested in Fast Track. You can check it out. But if you're not, maybe you do have a lot of capital, you're just not interested in Fast Track. Got it. Or maybe you have, you're newer to this game. Take note of how I think so many people just they see something crash. They're like, oh, Bitcoin's on sale. They buy Bitcoin. They have no plan after that. And I think that's when the game really starts. And I love how you're always thinking multiple moves ahead, looking at equities, putting the piece of the puzzle together. And you're saying, where's the risk? What if I'm wrong? How do we hedge against that? And if the markets move up, I'm going to do this. I'm going to reverse my position. Then I'm going to go long. And you've thought through it. So you're never in a position of panicking. What do I do? And I met a guy who I'll connect you actually, David, with, because we were chatting about it, but he took over his family hedge fund business basically. And what was fascinating with him is how far out he thought of. He was playing chess 20 moves ahead. He's thinking 10 years out of how do we, grow a $100 million fund into a $250 million fund. And if this, then that, if this, then that. And he doesn't care what the markets do. He's got a plan for every scenario, just like a chess player already knows all your moves and all the variables. And I'm like, that is what's separating $100 million plus hedge funds from someone who buys high, sells low in crypto, which is 80% of the market, by the way. So I think from that, I would take note of that and see how can I keep developing my chess strategy. Maybe that's in business too. A couple moves ahead, 2 moves ahead, and then 5, and then 10. And then you can be like David someday and be like the Fast Track clients who are, how do I really build generational wealth? And how do I play the game 3 cycles from now? How can I double my portfolio or 10x my portfolio every cycle? I'm just like, that is available. I don't even think I'm exaggerating if you play your cards right. Not, oh my God, there's a 24-hour red candle and I'm freaking out. The game is over and Bitcoin's going to zero. So I love how you zoom out.
Speaking of zooming out, we can't be siloed as investors in crypto. We can't just look at what Bitcoin's doing. We can't just look at what ETH is doing. We can't just look at what Sol is doing. We have to zoom out and take a look and see what are these much larger markets doing. Equities are much, much, much larger than crypto. And the bond market is even larger than the equities market. So we need to have, we don't have to, have a super detailed view into what equities and bonds are doing, but we have to be aware of
Mm-hmm.
what they're doing
Mm-hmm.
because equities are positively correlated with crypto. So for me, that just means, hey, I'm going to be checking in on the S&P. I'm
Mm-hmm.
going to be checking
Mm-hmm.
in on the NASDAQ. Look, got a nice little
Mm-hmm.
breakout above resistance today. I'm
Mm-hmm.
going to be checking in on gold. Gold breaking out to some fresh all-time highs yesterday and again, fresh all-time highs today.
Mm-hmm.
I'm checking in on crude oil because commodities are an indicator of what market participants believe the health is of the global economy. So if we see crude oil selling off, that could tell us that market participants are a little bit
Mm-hmm.
skeptical of the future path of global growth. So
Mm-hmm.
if we see crude selling off, maybe there's some global growth scares. I'm also checking in on the yield on the 10-year. I expect the yield on the 10-year to continue to decline, which could put some pressure on the US dollar. So if we see the US dollar continue to move lower here, and we see um, bonds move higher, notes move higher, the yield on the 10-year move lower, the dollar move lower. I think that these things could potentially be net positive for equities and net positive in the long term for crypto also. So really looking forward to seeing some of these moves play out over the next couple of weeks, next couple of months. I think the most important thing here is not to be stuck looking at day-to-day
Yeah.
movements. I'm zooming out here. I'm thinking bigger picture. What's going to happen in Q4? What's
Yep.
going to happen next year? What happens over the next 12 months? And I'm building a portfolio around my assumptions for the next 12 months, not the next day
Yep.
or week. So
Let's
zooming out is important.
let's go in the comments if you guys want more content like this. If you'd like to see David weekly doing some little fast track conversations and chats, let me know in the comments. We'd be happy to set something up and keep you kind of plugged into the bigger picture. And again, if you have more capital, then this kind of stuff is really, really valuable to you. Be in these kind of conversations daily if you can, if you want to take yourself as a serious investor. David, thank you so much for your time.
Of
And
course.
with that said, if you enjoyed this video, like it, subscribe, share it with someone. This YouTube channel does not grow without your support. So if there's someone who you're like, hey, watch this, like they should see it, support the channel and support your friend, support the group that you want to share it to. And with that said, we'll see you in the next video.